Hey everybody, welcome back to the channel. We are talking SOFI today because SOFI will report earnings on January 27th before market open. SOFI has run up over 125% in the last 1 year. There's a lot of enthusiasm among YouTubers. Now on this channel, we have been talking SOFI from back 2021-22. So this is not something new for us, but because they're going to report earnings and they have this massive run, how does it shape up to be in the coming earnings? I have heard of price targets of $30, $45. So we'll get into all that stuff and I'll share with you my trade idea for the earnings if you like to play earnings. So if you enjoyed today's video, find any value, make sure you share it with your friends and family. And without further ado, let's dive in. Last 1 year, SOFI is up 125%. I'm recording on January 22nd at 9:48 a.m. So the market is currently open. SOFI is down slightly, 0.45%, so you can see the sticker changing. Because of this most recent run of 125%, the stock was trading around the $7.75 at the beginning of last year. Right now it's trading at $17.82. So with that said, the market cap has really ballooned up to almost $18 billion that you can see here. The short interest continues to remain at 11.9%, which is still concerning, but I know for a lot of trader standpoint, you like to play the short squeeze. We'll get to that a little bit later. The forward PE ratio, if whatever you consider SOFI to be, it's still sitting at 134. So it's really not the best deal out there if you're looking for a more value side of the investing. SOFI is not a value play. It is a hyper growth play and you're hoping for that big upswing, especially as it grows into its valuation. They reported earnings on 10/29. That was the previous earnings, and they beat both on top and bottom line. Their EPS was 0.05 cents and their earnings revenue actually was 689, and they did beat it by $55 million. For the upcoming earnings, their revenue estimate is 678 with an EPS of 4 cents. Going down to the earnings history, and I always tend to look at the earnings history just to anticipate whether we will have a beat or not. Now the chances are it's highly probable that they are going to have another top line and bottom line beat, and you can see that they have not missed the revenue since they went public. They did have couple of misses on the EPS and couple times it came in line. At least in the last 4 quarters, they have continuously beat top line and bottom line, which we anticipate is going to be the same case this time as well. Their net interest income has improved, has been increasing, so that's a good sign. Their loan services revenue actually has declined. It did increase, it did tick up a little bit in the last quarter. So their total revenue overall still stays above 500 million. So they brought in about 691 million, which is growing, but you can see that it has been a little erratic over time. Operating income has also been erratic. They have really not been able to stabilize their expenses. So this is why for now, operating income is a little bit on and off. Sometimes they save 94, sometimes they come 63, sometimes they have 16. So this is a real major area of improvement for SOFI as it grows into its valuation. Keep in mind, this is still a growth, hyper growth company. This is not a value play. So do not buy SOFI if you're looking for value investment. Because of their operating expenses being high and operating income being low, again, we can see the net income is also erratic. 5 quarters ago in September 23, we had actually negative net income. Generally on this channel, we tend to find undervalued stocks and then position ourselves for that big move up. In case of SOFI, because of the recent run up of 125%, there has been a lot of talks of SOFI going into $30 and $45, and this is precisely because the compensation of the executives are tied up. But regardless of that fact, the fundamental point from a valuation standpoint is that it is trading at 105 times your earnings and 107.7 times the price to sales ratio. So whichever metric you like to use for your investment analysis, trading analysis, use that and be consistent with that. When it comes to earnings, the option market overestimates SOFI 77% of the times. So generally, even though they anticipate the move will be about 16% or so, it tends to move about 11%. So based on the actual move, we will take actual move as 11.2%. So based on today's price, we can expect the stock to move around $19.82, which will be the actual move post earnings. And similarly, we can put this right here, which is going to be the 11.2%. So we'll take that as a 16.05 move. So we'll add it over here as well. So this is going to give us a good idea on where we can expect the SOFI stock to trade, the upper limit and the lower limit of the band. The point of control is 1581, which means that this is where the stock tends to get attracted. This is not a spot where there is a lot of trading that happens. We have decent volume shelf around the $17 mark is where we will see a lot more trading happening, and the volume shelf tends to increase getting closer to the point of control, which is right at the 1581 level. The RSI is fairly high at 6581. The volume has steadily picked up, and we will see a similar trend for Wednesday trading, Thursday trading, Friday trading going into Monday. I'm recording this video on January 22nd, so by the time this video comes out, the stock prices will change a little bit, but you will still have 2 trading days, Thursday and Friday, to take advantage of any of the moves. The 20-day moving average has curled up. The 50-day moving average is slowly climbing up. We see a similar trend of the 200-day moving average closely climbing up as well, which is coming closer to the 956 level. So what are the price targets we should look at? We already saw we have added these two upper range and the lower range of the last 13 quarters average move of SOFI stock price. And when we layer it up with a Fibonacci extension, the 78% pretty much aligns with the top end of the band. And we will target this particular move of 19.82 or $20 for SOFI in the coming earnings. On the downside, we could see the stock pulling back all the way to the level of $15.98, so let's say $16. So from a current price, we could look the stock going up to about 20 and coming down all the way to $16, or maybe $15.50, something on those lines. You could use an iron condor over here, but I want to play SOFI stock to the upside. I have opened a SOFI $16 call, expiration March 21. From the time I just opened, I'm down about 5% more or less. Current cost basis was $3.06 for the call option. So let me explain why I have done that. So for a $16 call, this is how our table will look like. We have opened the call option today. We have about 60 days or so for the call to expire. And what we really want to aim is for that upswing, if that comes, we can be able to capture anywhere between 27% to going up to 360% or even higher. Our break-even price will be about $19 or so, which falls in line to right over here. Also keep in mind that you could lose a majority of your stake. So when it reports earnings on 27th, on 28th, you could lose, if the stock drops to $15-16, you could lose about 60% of the value of your investment or the call options. This is exactly the reason why we have given a little bit extra time to our call options, so that we have some time for the stock to recover in case you want to hold the call options for long dated. In this particular case, I am holding the call option specifically for the earnings play. So this is the reason I am going to put a stop loss of about 20% or so. I'm going to get out of the call option if we see a reversal in the stock price post earnings. And often you will see there are generally buy the rumor, sell the news. The reason I bought it on 22nd is because if I can play this going up to the earnings, I may be able to get out and close out the position before even the earnings if I am able to make 80-90% on this trade. So that is the basic idea of opening a call option. In case the stock pulls back, I'm going to do a similar idea on the cash secured put. I'm going to open most likely a 16 delta or a 20 delta, which is a $14 or a $15 cash secured put, where I could get anywhere between 46 cents to 72 cents. And keep in mind is if the stock pulls back to the 1550 level, this is going to become almost near the money or in the money, and its premiums are going to be massive. And I want to play the call options for the upside with a stop loss of 20%, and then also keep a track on the cash secured put, because I want to get in again in SOFI and build my position out for the long term. So those are a couple plays that I'm currently looking at from SOFI standpoint. Are you going to be playing SOFI for earnings? Let me know in the comments, and make sure you subscribe to the channel, because next week we will cover the SOFI earnings, as well as I will give you an update on this trade and how did the call options perform and the cash secured put idea that I shared in this video. I will see you next time, investor family. Happy investing.